All right, let's talk about the single most painful thing that can happen to a trader. It's that moment you watch a beautiful winning trade completely fall apart and turn into a loser. Today, we're digging into a lesson from a veteran trading mentor, and he cuts right to the chase, revealing the one single shift in focus that truly separates the amateurs from the pros. You should really let that sink in for a second, because this one sentence, this is the entire game. It's the line in the sand between traders who are stuck on that profit and loss roller coaster and those who are actually steadily building their accounts. See, most new traders are obsessed with finding the perfect signal to get in. The pros, they know the real money. The real secret is having a concrete, non-negotiable plan for when to get out. I mean, come on, let's be real. Who hasn't felt this? That sickening feeling in your stomach as you watch all that green on your screen just evaporate, turn red, and then you're just kicking yourself thinking, why didn't I just sell? Well, that exact feeling is what we're going to solve today. So where does that terrible feeling come from? It's not because you picked a bad stock. It comes from a war going on in your head. It's a battle between two completely different ways of operating. Are you trading based on hope, or are you executing a system? And this right here, this shows you the psychological damage. The new trader is just emotionally wiped out, tired and mortified, because they're always getting hit with curveballs they didn't expect. Their only strategy is to hope for the best. But the professional trader, they're refreshed and purposeful. They aren't guessing, they're not surprised. They're just reacting to predefined signals from their system. One approach leads to total burnout, the other leads to confidence and security. Okay, so if having a system is the answer, what's the most important part of that system? This is where almost every new trader gets it completely backward. They spend 99% of their time trying to find that perfect entry. But what this veteran trader reveals is that the real edge isn't found in how you get in, it's found in how you get out. Our mentor lays out a couple of simple, systematic ways to exit. The first one is for trend traders, the folks trying to catch those big, long-running moves. A trailing stop is basically your automatic safety net. As the stock goes up, your stop moves up with it, locking in more and more profit. But if that trend breaks and the stock drops by a certain amount, boom, it sells you out automatically, protecting the lion's share of your gains. So a trailing stop is fantastic for those longer trends. But what if you're in a much shorter-term trade? Let's say you're playing the classic run-up into an earnings report. You can't just let it run forever. You need a specific target. So how do you pick one that isn't just a random guess? And here it is. This is what separates professional analysis from just pure gambling. The answer isn't a gut feeling or a hunch. It's in the data. The advice is simple. You need to become a historian of your stock. Do the homework. How did this stock act the last time it was in this exact situation? And here's what that research looks like in practice. Let's say you look back and find that before the last 4 earnings reports, this stock ran up 8%, 7%, 10%, and 12%. Well, all of a sudden, you're not guessing anymore, are you? You now have a data-driven profit zone. It's somewhere between 7 and 12%. So if your trade is up 10%, history is screaming at you that it's probably a great time to take the money and run. That's a system. That is not hope. Having a plan to take profits is fantastic, but it's only half the battle. The other half, and this is the part that keeps you in the game for the long haul, is having a bulletproof, non-negotiable plan for controlling your risk when things go wrong. Our 30-year vet uses a really powerful analogy here. He says a catastrophic trading loss is a lot like a plane crash. It's almost never just one single thing that goes wrong. It's a chain reaction, a series of small failures that cascade into total disaster. And here's the anatomy of that crash, step by step. First, the profit got overextended. It pushed past those historical numbers we just talked about. That was the first warning light flashing. Then came the second failure. He ignored his system. The trailing stop was hit, but he didn't sell. And that led to the final, fatal mistake. He threw his plan out the window and made an emotional decision, just hoping it would bounce back. This is probably the biggest mindset shift you have to make. You have to fire your ego from your trading desk. Your goal is not to be right on every trade. That's impossible. Your goal is to be profitable over hundreds of trades. A good CEO knows some projects will fail. Being wrong is just a part of the business model, as long as the winners more than pay for the losers. So how do you actually do this? How do you put it all into practice? Well, the mentor didn't just give a bunch of theories. He actually shared his personal trading code, the rules he built over 30 years in the markets. And get this, he kept these rules in a handwritten notebook. Just think about that for a second. These weren't just some casual thoughts. These were lessons paid for in blood, sweat, and dollars, written down so he would be forced to look at them every single day. Let's just pull out a few of these gems. Never hope for a bounce back. Cut losses. I mean, that's it. It's absolute. Or how about this one? A successful trade is one that follows your trading plan. Did you catch that? The definition of success has nothing to do with making money. It's about following your rules. And my favorite, your opinion doesn't matter, only price action. That's all about humility. The market is king, and your job is just to listen and react. Now, to actually live by these rules, you have to make one last critical shift in how you think. You have to completely change how you view the act of trading itself. Trading is not a trip to the casino. Our mentor compares it to being a professional golfer. You don't get better by just mindlessly hitting 1,000 balls with bad form. You get better with focused, deliberate practice, where you learn from every single mistake. You have to treat this like a business. You are the CEO, and your number one job is to protect your capital and execute your business plan. Period. And that brings us right back to where we started. This is it. This is the cornerstone of your entire trading business. Yeah, your entry gets you in the game, but your exit is what decides if you're profitable. It determines whether you're running a successful business or just an expensive hobby. So, the lesson is over, but for you, the work is just getting started. Knowing this stuff is one thing, doing it is everything. So look at that list of rules again, rules that took a veteran 30 years to perfect. What is the one rule that you, starting right now, are going to write down and make the absolute foundation of your trading business?